Hi there traders, this is Steve Miley for FX Explained and this is this week's Macro Watch. And in this publication, this video, we're going to be taking a look at the major macroeconomic events that have impacted markets over the last week going into the end of September 2019, and then also looking at the potential of what's going to impact markets going into this week and going into early October. So really the Trump impeachment inquiry here and UK politics really to the fore on the macroeconomic side. Let's start talking about Trump. So the publication of the conversation between US President Trump and the Ukrainian President last week then led to Nancy Pelosi here. She went on to initiate impeachment inquiries into President Trump's action, and the impact was negative for riskier assets, so stock markets went lower on the back of that at the start of last week, and this is clearly something we're going to have to monitor going forward. It's going to be an important news story, and we anticipate further developments on that going into this week for early October and potentially through the end of the year. A minor impact in here was from, or muted impact really, was from the Middle East stresses. They've faded a little bit. We haven't had any escalation since the September attacks in Saudi Arabia. No escalation of tensions really between Iran, Saudi Arabia and the US. So at the moment in here, this is kind of taking a little bit of a backseat. The oil market a little bit more in a consolidation mode, but we're going to have to monitor this. This could easily come back very quickly. So monitoring that situation. Let's move to the ongoing, never-ending US-Sino trade war in here. Trade talks are set to resume in early October, potentially this week. And the minor development really last week was that President Trump said in relation to a trade deal, and quote, "It could happen sooner than you think." So we're going to wait on that to see if there's any further developments on the trade negotiations, trade deal, trade war. On the Brexit side, there was some fairly big news. The English Supreme Court ruled that the Parliament, the proroguing of Parliament, that was the Conservative government shutting down Parliament, was unlawful. The politicians are back in Parliament now, and there's potential for a no confidence vote already in the government. That's being seen. Although it makes a no-deal Brexit less likely now, what it does mean is that there's a lot of uncertainty, even more uncertainty in UK politics. The FX market doesn't like that. The pound doesn't like it. But the FTSE did like it because the weakness in the pound has sent the FTSE 100 higher. Turning our attention to the Eurozone. The Eurozone data continues to disappoint. German, French and Euro-wide purchasing managers index data last week was disappointing, missing market expectations. And this saw a weakening of the euro with euro-dollar significantly lower. And then finally, let's turn our attention to the data going into this week. Chinese purchasing managers index data and also UK GDP. We've already had this Chinese purchasing managers index data beating expectations. UK GDP later today. Reserve Bank of Australia make their interest rate decision on Tuesday morning, and then we get manufacturing PMI from global manufacturing PMI and Eurozone CPI we get in here on Tuesday, along with US ISM manufacturing data. We get the US ADP employment change on Wednesday, non-manufacturing service sector PMI and the US ISM non-manufacturing data on Thursday, and then the always much to watch US employment report comes through on Friday. I'm going to wish you guys a great trading week. Thanks for watching the Macro Watch. Remember to follow us on YouTube and like the channel. So speak to you soon, guys. Have a great trading week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.